All right, welcome everybody to Intuit Academy's Value Pricing, a new way to run your practice webinar. My name is Hector Garcia. This webinar presentation was originally written by Michelle Long. She did something similar to this a couple months ago, and I'm going to do sort of an updated version of it, and I'm going to add some of my own personal experiences into this. So if you've been to the other webinar, this would be a review. If this is brand new for you, this is great. All right. So I live in I live and work in Miami, Florida. This is where my practice is. Our practice is split into two, into traditional accounting services like accounting, bookkeeping, tax, financial statement preparation, and business consulting, and QuickBooks and Excel training. We're actually kind of split between the two. I'm the main author of contributor of my blog, which is QB Blog. So check it out if you like what I'm saying. And the name of my company is Quick Bookkeeping and Accounting LLC. I am a CPA, a advanced certified QuickBooks Pro Advisor, and a QuickBooks Online Pro Advisor as well. Now, this is a CPE eligible webinar, so it's extremely important for candidates that they pay attention during the entire series. Somewhere in the middle, we're going to have a keyword or a password that is going to be required at the very end of the webinar, and you must answer that correctly in order for us to have verification that you were here throughout the entire webinar. So it's very important that somewhere in the middle, I will announce it, I'll leave it up for about a minute or two, that you write down the keyword for your CPE. The certificates will be emailed to you, and somebody from Intuit is going to send that. And it takes roughly about 14 business days. So you will keep that for your records. If you don't get it within 14 days, you're welcome to send me an email. I'll put my email on the screen at the end of the webinar. All right. Now, the materials are accessible through intuitacademy.com/materials. I'm just going to show you this real quick, see what that looks like. This is what the website looks like. This is what the website looks like. And all of our webinars the handouts are posted up here. The one for value pricing it's right here. So you can just click on that and download that on your own. All right, perfect. What's the agenda for today? After completing this webinar, you'll be able to understand value pricing, specifically as it compares to hourly billing. We're going to talk about some pros and cons, some benefits, some of the common criticisms, some of the great approaches that have helped us successfully have a good implementation of value pricing. And we're going to talk about some of other best practices that I may have heard from a couple of consultants as we do on some of these trainings. We're going to be able to summarize the benefits of value pricing, both for the accountant and for the client. It is important that this, at least from a perception point of view, your client needs to see value pricing as a positive thing, not as a negative thing. And you as an accountant, in order to implement it, the pricing needs to be correctly done and implemented in order for it to also be economically beneficial idea. Now, we're going to discuss how to implement value pricing, some of the ideas behind implementing value pricing. We're going to talk about creating packages. Okay, not every client is the same, so we're going to talk about packages that different clients can latch into depending on their needs. We're going to talk about QuickBooks Online, specifically the value pricing model with wholesale pricing. So how to include the QuickBooks Online service as part of your practice to add more value or more perceived value to the service. We're going to talk about some price levels and ranges. There was a average billing rate survey done last year by Intuit that a bunch of pro advisors, accountants, consultants were asked about their hourly rates, their fixed rates. So we're going to get some sort of national averages that we're going to show on the screen, so you get an idea of how your pricing compares to what's been done on the survey. We're going to talk about how to quickly identify which clients are going to be easiest, quickest to implement into value pricing right away. And we're going to be able to understand the importance of an engagement letter and exactly how engagement letter work in combination with implementing value pricing. We're also going to take questions along the way, so feel free to ask questions or clarification in the chat, and then we'll try to during the middle of the webinar or when we're done with a specific section, we're going to try to answer some of these questions, and if some of the questions are just too complex to answer, I'm going to do my best to try to answer them via email, or you're welcome to email them to me as well. All right, so let's talk about hourly billing or hourly pricing. So the traditional method, most accounting firms, most law firms work on what's called the cost plus method, where we measure the time spent in a project. We measure the time spent with a customer. And then we actually calculate how much does it cost per time on these staff members. We usually take their salary or hourly rate plus their benefit costs plus their taxes, et cetera, et cetera. We figure out what the hourly cost per employee is, and then we add a plus to determine that hourly price. That plus is supposed to be a combination between our profitability as a firm and also to make up for the non-billable hours, right? To make up for idle time, training time, to make up for the cost of our infrastructure, of our office, of our phone systems, of our marketing. So determining that plus is a little bit tricky. However, most practices take that cost of the staff member and typically that entirely aggregate cost, multiply that times 3, and that in average is an hourly price. So most, and this obviously the size of the firm would be different, but a lot of firms, they'll pay somebody, let's say $30 an hour, and they'll bill them out at 90. And some will be higher, some will be lower, but that's kind of the industry average. So that's hourly billing. Now, value pricing is in contrast. It's not billing by the hour, but billing by the entire work, the entire result of the work, the deliverable. So instead of charging 6 hours for bookkeeping this month, 4 hours the next month, 6 hours the continuous month, and then 4 months later, 3 hours, and then just keeping track of every single time you do work for the client and charge per hour, is figuring out the overall fee for the service, for the end result, for the work, and having a fixed price every month. Now, this was implemented first with a concept called value billing. Value billing is we invoice per hour like we normally do. We have some sort of hourly billing, but then we adjust retroactively for what we want that fixed rate to be. Whereas value pricing, which is very similar, is we have to determine first what is the value of the work to the client? What is the value, the perceived value of the end result to the client? So instead of having a client think about hours and who in the firm does the work and how much it costs for the entry-level bookkeeper or the senior bookkeeper or the CPA, whatever that combination of, instead of having the client think through these and presenting invoices as a combination of all the hours from all the staff members, just having a one fixed fee that determines everything. Now, this is tricky because not every client is the same, not every engagement is the same, and even a client could have a fixed fee, could have an engagement that sometimes it changes every month. Sometimes the actual scope of work kind of varies through time. So that's the tricky part behind value pricing, which we're going to discuss in some detail. The most important thing is that, number one, as an accountant, as a consultant, you cannot underestimate the value, right, that you provide. You cannot underestimate what your client values your work. Unfortunately, with an hourly billing model, we always are stuck to a client asking us, how much do you bill? What's your hourly rate? And we immediately put a value to our work. by giving them an hourly fee. Now, a lot of clients will misperceive that because they say, wow, 150 is too expensive. But maybe they're not considering that at 150, you are 3 times as fast as the one that costs $50 an hour. So it's a wash anyway. Plus, all the other value that you bring to the table. So most important piece before you can implement value pricing or understand value pricing, you have to have complete and utter confidence about the value of the work that you provide. The other important concept is we have to get out of that model of selling time. Okay, as an accountant or a consultant, we have many clients that we have worked with in the past. We have many years of experience. We have many skill sets that maybe they're not applying to the particular engagement, but they're bringing value to the overall result of the work. So we have to start thinking about that we're actually selling knowledge. We're selling experience. Okay, we are actually selling innovation. We're selling customer service. We're selling infrastructure. We're selling our access to our Pro Advisor program, which has a bunch of resources. We're selling our access to our network of peers that we consult with and talk about some of the situations that we have. So the concept of value pricing is we have to get away from selling time and get into selling value. And value is a combination of knowledge, experience, innovation, customer service, infrastructure, all these things. All right, let's go to the next slide here. Okay, let's talk about hourly billing. So let's break down the pros and cons of hourly billing. Okay, what is the pro? You get paid for all the time you spend, right? Now that's in theory. That's assuming that we are billing 100% of our billable hours, and that also means that we're actually keeping track of it, which is a huge challenge to a lot of busy practitioners. Keeping track of the time, it's a big challenge. Now, what's a con? We don't get paid for the value of our experience, knowledge, and infrastructure. It's just time. Now, think about some of the engagements you had in the past. There has been some clients where you've been able to solve a problem in 30 minutes, in 1 hour. However, the minimum requirement to be able to solve that problem in 30 minutes or an hour is making that very same mistake 2, 3, 4 times in the past through many years of experience that have led you to know how to solve the problem. So how do you put all that experience, all those mistakes in the past that converted into a positive consulting experience in the present? How do we give value to that? So that's the problem with the hourly billing is we don't get that value. It's not built in. The other piece, a positive part of Pro, it's relatively easy to determine gross margin on your hourly fees. So gross margin is when we take our rate that we charge, then the rate that we pay our employees or even ourselves, right? So if I am a solo practitioner and I don't have staff, then I want to think of the opportunity cost as a direct cost of the hourly fee. So that gross margin is that difference. With hourly billing, it's relatively easy to determine that. Now, what is the con is that there's an artificial ceiling in all of your earnings potential because we have to sleep 7 hours a day, 8 hours a day, right? We have to eat. We have to take care of our family. We have to rest. So no matter what, there is a limited time of the day that we can spend with clients. There's a limited time in the week, in the month that we can spend on billable hours. So that's the artificial ceiling. So the only way to earn more with billing is to increase your rate. And even by increasing your rate, all you're doing is bringing that ceiling a notch up. You're stopping the exponential potential of earnings with hourly billing. Now, what's another pro? Clients tend to stop calling and asking for servicing and asking for work because you're going to be invoicing them for every minute, every hour, every half hour, whatever it is. And if you are invoicing them consistently for all your time, clients tend to stop being a pain, right? They tend to stop asking for servicing because they say, you know what, maybe I shouldn't call them so much because I'm going to get an invoice. So that could be a pro. for some of the busy practitioners that have people calling all day long for, what we like to think as dumb questions, but our clients don't think that. And but what is the con? The con is clients will have a perception of incomplete work or bare minimum work. Think about clients that you have acquired through the years that have had another accountant or another consultant. And when you ask the question, hey, what happened to the other guy? What happened to the other gal? You will find, if you guys are like me, you will find that most clients answer about the same. They say, well, the last guy just kind of did my taxes and that's it. The last guy just kind of did what he had to do and he was not proactive. He didn't give us advice. He did the bare minimum. It took forever to get a hold of him. He charged me for every little thing that he did. He charged me for every minute. So that's the perception the client can have, that you're a hired worker, not an advisor, not a trusted advisor. It could be a big con, right? Because your clients may not have a huge perception of the potential value you can bring because you're invoicing every minute, and some clients perceive that as, this guy's a penny pincher, this guy is tracking every minute, he doesn't really care about me, all he cares is about doing the work and invoicing. So that perception is very important. Now, what's the most important pro about hourly billing? The most important positive part is it's relatively simple to track, right? So anywhere you can write down 2 hours with customer A, 3 hours with customer B, and it's a simple pricing model, right? It's a simple business model to put together, and that's why most practitioners start that way. And some practitioners retire that way, believe it or not. But this is the idea of the concept that we're presenting in this webinar, is how to get away from that, how to evolve from that. Now, what's a con about hourly billing? It's value of idle time, training time, corporate culture, attitude, synergy, value statement, right? All these things that you build into your staff that make you a superb accountant, a superb consultant. All the things that you have invested in time and money and lack of hours of sleep and conferences and training, all these things cannot be accurately measured in an hourly billing process. And the cost, specifically the cost, how much does this cost? How much does your infrastructure cost? How much is this experience that you built through the years? How do we add that to our hourly billing? That's extremely difficult under hourly billing. Now let's talk about value pricing. Now, 3 pros about value pricing, okay? Client pays for what they perceive to be their need or their want, right? Also, there's very little surprises in the billing. That means from the get-go, you can gauge on your client's budget. From the get-go, you can agree upon a fixed fee. If your client can't afford it, then they're not ready to be your client. From the get-go, you can set up automatic billing, automatic credit card charges, right? Recurring billing. So that will simplify your client's perception of what your service costs, and that's it. There's also no artificial ceiling on the earnings. So assuming that you implement automation tools, that you implement apps, that you are able to train your client, that you can yourself work better, work on the cloud, all these tools that are out there to help us work better and faster will continuously increase our earnings, because our direct cost or our direct time spent is going to go down over time. Now, another pro is, historically speaking, there's higher earnings per client. So if you could build a model where you historically go back and see what you charge your client and you increase it, so in the average it's more than you normally bill, that's going to be a huge pro. So because there are months where they don't want to use you that much, there are months where they will use you more than normal, but hopefully the scale is towards the higher earnings per client model. Now, what are some of the cons or some of the challenges? Let's call it challenges. Number 1, the pricing scheme is truly difficult. It's not impossible, but it's difficult because you have to consider all the direct costs of input and have enough buffer on your fixed pricing to cover all that. Now, direct input costs, if you don't have timesheets, because some of the themes behind value pricing is quote unquote ditch the timesheet. You don't want to ditch the timesheet. So even though you're not charging with timesheet, you still want to keep control, because you should be able to analyze which clients under the fixed pricing model are unprofitable and get rid of them or increase their prices. The largest challenge, or the most common challenge that I've heard from other consultants and accountants, is that some clients abuse or have the potential to abuse your time because they're on a fixed sort of billing engagement, and then they will call you more, use you more, abuse of your staff's resources. And usually it's because an engagement letter with a strong set of restrictions and scope of work is not set. All right. Okay, benefits to the client. So for your client, the most important part is they will know the cost, they have expectation up front, and they will feel that the risk associated with working with you, it's much lower than working with somebody else that can at any time send them a surprise bill with hourly work. Okay, the client itself is not worried or hesitant towards calling or working with you, because there's no clock timing them and that sort of thing. And they usually feel better if you are understanding their needs. So they feel that you are an advisor throughout the entire process, and you're going to be more involved, even if you're not, but they feel like you're more involved because it's an all-encompassing fee. Okay. Now, what are the benefits for you as a consultant, as an accountant? The benefit from you is improved efficiency. With value pricing, you're forced to work better and faster. You absolutely have to have a good system in place for that. Okay, and also customer loyalty. So everything else we said, keeping everything else exactly the same, it's going to be it's going to render loyalty, because your clients are getting fixed rates. When they talk to their friends, they say, yeah, my accountant charges me X or Y, and they do everything for me. Now, obviously, the challenge to that is you have to tell your clients, hey, I really do appreciate referrals. I want referrals. I absolutely appreciate, and our business survives off referrals, but please don't share the pricing, because the pricing is customized to every user, to every customer. Now, one of the questions I'm getting from the audience is that this deck, this PowerPoint, is a little bit different than Michelle's original PowerPoint, and that's true. We're gonna upload it. It just takes a couple of days. We're gonna upload it and have my version as well as Michelle's versions in there. So I hope that answered your question. All right, now let's talk about your client relationship. Okay, the perception and the reality of value pricing is that you are getting more and more involved with data analysis, with data management, with interpreting financial results, guiding your client, being an advisor to your client, not just be a bookkeeper or an accountant, not just be a data entry person. So that perception of that, the fact that you're charging for data entry work, needs to absolutely go away. And value pricing helps with that, even if you are involved in data entry work. But the all-encompassing value of the service needs to include probably both, some data entry and some data analysis. Now, increased value, the increased value, or at least perceived value from your work, it's a huge impact. Okay, and the client not measuring the effort behind. Okay, so it's the end result that you're billing for, not the effort. All right, let's talk about redefining value for a second. So let's talk about a newborn baby, and this is an analogy that hits home with almost everybody, especially mothers. When the baby is born, what is the value of that baby? Let you think about that for a minute, right? I know it's difficult to measure. Is the baby worth more if you went through 20 hours of labor versus 5 hours of labor? Think about that, right? The baby is the baby. That's the end result. If it took you 20 hours to get him out or 3 hours to get him out, does that make a difference? So it doesn't. That's the theory, right? The baby is worth what the baby is worth. So just kind of quick analogy to help you think about how you redefine value. Okay, let's talk about perceived value versus actual value. So some of the clients will measure actual value based on what they're getting, what they're saving. So what are some of these factors that affect value? So some clients will strictly look at the abstract factors, right? They hired you as an accountant. What do they get? Oh, they get trustworthy information. They get information they can trust. They're in compliance. They get peace of mind. They get time to focus on their business. These are abstract factors, right? These are the selling bullet points of your service. Okay, this is very difficult to measure. This is something that you can't really put a value to, a monetary value anyway. Now, what are the measurable factors of working with an accountant? Actual tax savings, right? That's measurable. Actual cost savings, not paying a penalty or paying less penalties if you represent them in some sort of penalty IRS situation. And the efficiency, if the staff works better, faster, if they save time to achieve the same exact task, that's a measurable factor. So think about, put yourself in your client's shoes when you're talking about value or the value behind your work. They're thinking about all these things. They're thinking about, abstract factors and measurable factors. And during an engagement of fixed pricing of a fixed service, you want to keep both of these things in mind. All right, let's talk about the $1,000 screw fable, and that's another sort of example that hits home about value pricing. There's a fable. I don't know how true this story is. I don't know if it's been documented or not, but everybody talks about this. A huge factory stops production. One of the machines, it's unaligned or a screw is loose or something, and they can't produce. They stopped. Everybody in the factory tries to fix the machine. They can't get it. They said, you know what? Time to call a consultant. They bring the consultant in. He spends 5 minutes looking at it. He takes out a screw and tightens the screw in one particular spot. Turns the machine on. Perfect, working. The business owner, the manager is super happy. He says, hey, can you tell me how much it is? I want to pay you right now. And then the consultant says, yeah, sure, that will be $1,000. And the person says, $1,000? What do you mean? You spent 5 minutes here. You tightened one screw. I'm not gonna pay that until you send me an itemized invoice about everything that you did before I pay this invoice. So what does the invoice look like? He sends them the invoice and he puts $5 to tighten the bolt, $995 to knowing which bolt to tighten. And this is the fable that relates to us as accountants, right? We can fix the books with one journal entry. We can fix the books with one adjustment. We can reclassify thousands of transactions in 5 minutes by using the accountant tool for QuickBooks and get it all up and running in 20 minutes and 30 minutes. Are we going to bill just 20 or 30 minutes, or are we going to bill the value of the work that we presented? So that's a very important piece to keep in mind. And I thought that analogy or that business fable actually matches the situation. Now, all right. So,
okay, you sound great now. Thanks. You're doing great.
Thank you. We think about commoditizing your knowledge and your skills, not your time. Commoditize the result of your work. Commoditize the $1,000 invoice for tightening the screw. It's not how long it takes you to tighten the screw, it's knowing which screw to tighten. That's an extremely important concept to think about. And you have this knowledge, or you're building this knowledge. You're continuously working on being a better accountant and better doing better service for your clients. So don't sell yourself short by just putting a fee on your hourly time. Now, there are short-term challenges, right? It's challenging to put together the pricing model. Some clients work of a scale, exponential scale, where maybe the first couple of months you lose some money compared to hourly because you're going to spend a lot more time getting to know the client. You're going to spend a lot more time understanding your client's books and training your client. But the long-term rewards are there. So what may take you 6 hours the first month, 5 the second, for the third may only take you 1 or 2 hours every month going forward because of that. And that in itself is the true value that you get as an accountant, that you have a fixed fee from the get-go, regardless of how much time you're spending. All right, let's go to the next slide. So moving to value pricing, it's going to be 3 steps. First, establishing the packages, right? Because this is most important, because every client is different. Some clients have 20 bank accounts, some clients have 2. Okay, that's an important piece. Some clients have credit cards, statements to reconcile, some clients don't. Some clients have inventory, some clients don't. Some have QuickBooks Online, some have QuickBooks Desktop, some have third-party apps, some are construction industry, which is highly complex in certain situations. Some are simple service companies. So you can't just have one fixed pricing for everything. The packages help the clients pick and choose what's best for them. Now, then the next step is to determine the actual pricing, right? We want to figure out what price fits into each package. And then we continuously have to evaluate, does this work for this client? Does that work for that client? It's one of the best ways to pick up packages is to grab 10 clients at random and grab each one and kind of start thinking about what you would charge each client in a monthly basis, and then think about which package that you pre-establish best fits for them. That way you can evaluate and tweak these packages as time goes. All right, we're gonna stop for about 2 minutes for questions. And we also, up in the screen, we have our CPE keyword. So if you're a CPA that needs a CPE, please write this down somewhere, because there is going to be a polling question that you're going to have to answer. There'll be a multiple choice, and you have to make sure you answer that answer that's right there on the screen. Meanwhile, I'm going to kind of take a look at the chat to see if there's any questions. If not, we'll start in about 2 minutes. I'm just allowing everybody to write down their keyword here. Okay, no outstanding questions, so we can move forward. Perfect. So let's talk about packaging, right? Most of the times you want to think of that good, better, best package, or basic, middle, premium. Okay, I'm not saying you should only have 3 packages. I'm saying that you should at least have 3. And one of the very important things about packaging is, I'm gonna take you back in history here, maybe about 15 or 20 years, when Wendy's had a single cheeseburger and a double cheeseburger. Okay, 80% of the sales were the single cheeseburger. Right? People kind of feel fat, if they're buying a double cheeseburger. They feel that they're not being healthy if they buy a double cheeseburger, because it is the highest of the 2. Then Wendy's introduced the triple cheeseburger, and all of a sudden you were having 50% of the sales. Before it used to be 20%. 50% of the sales jumped for the double cheeseburger, where only about 30 went to the single and only 20 went to the triple. So inserting that middle package, it is very important. Some people think, well, I don't want to pay the least. I don't want to get just basic, or maybe I don't need that much, right? That's the concept, right? They kind of get that thing in their head. I don't need that much. I think the middle one is just fine. So you want to kind of think about at least having the capacity of doing that. And then somebody's asking if we can get a copy of this presentation later, and the answer is yes. There already is this basic presentation that Michelle did. It's on the Intuit Academy website, and then mine that has some of my own experiences in there, and we're going to upload that as well. All right, so now what kind of things do we see in a premium type package? Well, we'll get maybe priority service or response, things like 24-hour answers on your emails, or you get a call back within 24 hours or something like that, right? So we have to add, if you want to sell more of the quote unquote premium price, you always have to add some sort of kicker, right? Now, these premium packages and fixed pricing are typically seen in the part-time CFO type of engagements. Okay, they're seen in the type of engagements where even though we we do all this service behind the scenes. We physically go there once a month to present financial statements, or we physically go there to coach some of the employees. We physically go there to attend strategy meetings as a sort of financial support. So that's very common in fixed fee engagements, that sort of premium. So let's do some examples. So silver, right? And then, good, better, best, basic, middle, premium. You give yourself whatever name you want to give it. So just an example, let's do a silver, gold, platinum, or you can do diamond, I guess. And then, so in this type of situation, we'll do silver. Okay, we'll just reconcile and we only answer email questions. Gold, we'll reconcile, but we'll also manage your accounts payable or help you manage your accounts payable with, let's say, some sort of third-party app like Bill.com. I'm not saying specifically has to be that one. It's just an example. Platinum, well, we do phone support up to an hour included. We also do payroll. We also help you manage some of your ARs or help you adjust some of the invoices, et cetera, et cetera. These are just 3 examples you can start thinking about putting together. Okay, let's go to the next slide here. Okay, new clients versus existing clients. This is an important piece because some clients are so used to how you work. Some clients are so entrenched on how, and they're used to your hourly fee. They're used to knowing what's billable and what's not billable. They're institutionalized by your current practice structure. And the clients are profitable and they're good, and maybe you shouldn't touch them. And that's an important piece. You don't need to switch every client to fixed pricing. It will be ideal, right? That way you don't have to have two systems, but don't feel pressured to have to get every single person to do it. Another important trick about value pricing for existing clients, if you're going to send them a letter saying, hey, this is going to be your new price, especially if the price is going up, right? Or the perceived value is not there, you have to add that additional value component. You have to point out what else are they getting for this. You have to point out how this allows you to service them better, faster, more efficiently. That piece has to be extremely important. Now, sometimes communicating the pricing model requires some high levels of tact, right? We have to be careful of how we communicate it, how clients assimilate it. You want to reduce the probabilities of attrition. Most practitioners are afraid or scared of moving to value pricing specifically because they don't want to change what quote unquote works, right? If it ain't broke, why fix it, right? And then we're not saying hourly pricing is broken. I'm saying that most accountants and consultants, as technology evolves and moves to the cloud, are going to move to this model, and it's going to be harder and harder to catch up. So you want to be at the forefront of changing these prices. And sometimes you can do things like increasing just your hourly rates and saying, look, these are my new hourly rates, period. But when you have a value price option, you're going to get a significantly smaller cost compared to our hourly rates. So what's a common thing, right? We have a client that in the average, let's say, just say an example, in the average pays you $600 a month. That's the average. Some months is 400, some months it's 800, right? Because of the hourly rates. All of a sudden, we're going to increase the hourly rates by 25%, 30%, whatever it is. And moving forward, now the range is not going to be 400 to 800, it's going to be 500 to 900, or maybe 600 to 1,000. So what you want to present is, with implementation of value pricing, you can put a ceiling towards the higher end of their billing at the traditionally hourly structure because you have increased your hourly rates. So it's kind of complex. It's kind of a 2-step process. Increase the hourly rates first, then bring the value pricing as an option to the increased hourly rates. And your clients will typically, because you're giving them 2 options, not just one, they will typically assimilate it better. They will typically accept it much better. All right, now I'm gonna share with you a letter that I wrote to my clients when I moved a couple of them to fixed monthly fees, and this is sort of generic. This is specifically what we wrote on the email or on the letter. Due to a recent increased investment in staff training and infrastructure, in order to help serve our clients better, we're announcing a across the board increase of hourly rates from 75 to 150. Since you've been a loyal client of us for 3 years, and you more than everybody else appreciates the quality of our service, we want to offer you a fixed monthly fee, right, for the following services: 1, 2, 3, 4, 5. Starting January 1st, 2015, you can expect now a fixed invoice for the amount stated above. Please sign the enclosed engagement letter. If you feel your fixed fee should be increased because you want to stay in an hourly fee or you want more services, let us know. Something like this, something as simple as that, can communicate what you're trying to achieve, and at the same time, you're actually complimenting them on them being a good client, and you're giving fixed pricing as a positive thing, not as a potentially negative thing. So this communication is extremely important, and I suggest that you kind of try it with a few clients first and then some other, and tweak it as you go, because one word or two words that get misinterpreted could potentially have a client, change their perception. Could be you're just trying to make more money, quote unquote, which we know that's what it is. We want to be more profitable, but we're just trying to stabilize our fees, and we're trying to increase the perceived value to our clients. Okay, now let's talk about how wholesale pricing is involved in this entire process. With QuickBooks Online, as an accountant using QuickBooks Online, you go to QuickBooksOnlineAccountant.com or QBOA.com, sorry. You can set up a client either on the Essentials or Plus level at 50% versus what the client would normally pay. So instead of having your client pay, let's say, $40 a month for QuickBooks Plus, you pay the $20. That $240 your client is saving, it's now going to become part of your profits, because you're going to include, quote unquote, that value in there, and your client it's going to get a saving because they don't have to pay for QuickBooks Plus anymore, because it's now built into your engagement. Now, obviously, for clients that have established accounts, it's going to be more complicated to just kind of switch the billing method, but this is much better for sort of new clients and new engagements. Okay, now, wholesale fee would have to be included somehow in your client's fee, right? With QuickBooks Online, we are going to have a higher level of collaboration. Okay, traditional methods of communicating, like you email me a list of this, you email me a list of that, you put the password in QuickBooks so I can get my bank feeds up and running. That stuff gets eliminated or really highly reduced with QuickBooks Online. You can also start processing automating some processes with third-party apps. There's tons of third-party apps in apps.com. We talked about bill.com. There's Transaction Pro Importer to import information. There's funding gates to manage your accounts receivable. There's tons of third-party apps that have a nominal monthly cost, but have a really high amount of efficiency increased. And now you can work together with your client and be a superhero to them. And having everything on the cloud in a single database to access all the information, accessible anywhere, it's a huge value. Now, let's talk about some of the billing. So write down this URL here if you want to look at the billing rate survey, because all the details about the hourly fees and fixed fees that people across the country and across the world, actually, there are some were done in Canada and UK about their fixed fees are in there. Now, I'm going to go ahead and share with you some of the results from this survey. One of it is, this is a billing rate survey that compared how many are doing hourly versus how many are doing fixed fee rate. Now, this is in 2013. 10 years ago, this would have been 80% on the hourly billing side and maybe 20% or less on the fixed billing rate. So you can start to see that it's creeping up. It's becoming more relevant. More and more accountants are exposed to this concept, and also more and more clients are sort of expecting this. Okay, we are in the world where everything is appified, right? There's an app for that. We're in the world where software is not purchased over the counter anymore. It's a monthly service. Now, we need to, accountants, commoditize that as well, if not our competition will. So that's just an important concept to kind of bring up. I'm going to pull up a polling question just to kind of see from the people in the audience, where do we stand there? So let me put the polling question up here. And just kind of about the same type of question here. So what percentage of your clients are currently on fixed rate? So the answer is fixed rate. What percentage of your clients are already on a fixed monthly fee, fixed weekly fee, fixed annual fee, whatever? We got about 75% of the votes in. Once we're in about 90% of the votes, we can close the poll. We got about 88% of the votes. If you're there, please go ahead and vote. I'm going to give it about 5 more seconds. Okay, we'll work with that. 93% of the votes are in. So let me share some results with you. Okay. Now, 40% of you don't have any clients on fixed monthly fee, right? And that makes sense because you're in this webinar trying to learn about that. Only about 30%, less than 30% have over 50% of your clients. So there's a big opportunity to, and the interesting thing about this particular result, I would say, is that most people are in one or two spectrums. It's either a big majority of them or less than 20% or none. So it's not that many fall into that exactly 50-50 category, because you would probably agree with me that having that split billing method, it's more difficult because you have to keep track of who gets charged by the hour and who doesn't, and that sort of thing. Okay, all right, let's go to the next slide here. So fixed rates. This is part of the Intuit's billing rate survey. Okay, so let's look at QuickBooks Consulting as a whole, because it's probably the bulk of the attendees here are doing some sort of QuickBooks Consulting. So the average fee in 2013 charged as a fixed fee monthly QuickBooks Consulting is $220. Now, you could tell from the trend that the number is actually looking like it's going down. So that's an important piece. Maybe competition in itself, it's doing this. Maybe a combination of things, mixed rates across the states. But if you look at the mode, if you look at the most common number, you can see that in itself is increasing. So even though the average, it looks like it's going down, the most common fee, which is $500 a month, it's increasing. Okay, so that's an important piece to look at there too. But if you look at the top option here, accounting, you can see the increase from to $469 average for a fixed fee accounting. And sometimes there isn't that much difference between accounting and QuickBooks Consulting. Sometimes these two things are sort of mixed in. So that's an important piece to kind of keep track. So I just wanted to share that with you. And again, accountants are still discovering and transforming this in the industry. So it's not going to be as consistent throughout. Now, identifying clients to convert. So best thing to do is just pick 3 clients. Pick 3 clients that you can convert. Look at what regular services that you're offering. Make sure it's not a client that once you do service for them, 3 months later they show up, 6 months later they show up. It's more than a client that you're working with at least once a month. Also, that these clients are a good candidate for QuickBooks Online. QuickBooks Online facilitates fixed fee pricing so much because we don't have to deal with the drama of transferring a file back and forth, the drama of being able to log in remotely, the having to drive somewhere. Working from your office online through the cloud highly facilitates value pricing. Now, they can have complex transactions. So a client with heavy inventory, with credit memos, things like that are going to really make it difficult for a fixed pricing QuickBooks Consulting model. Also, your clients need to, these have to be clients that are good or are willing to separate business and personal, because there's so many sort of details to go through transaction by transaction to figure out what's business, what's personal, or going through a personal credit card and picking out what's business and what's personal. That in itself makes it a little bit challenging, right? It makes it a little bit challenging in itself to do some sort of fixed pricing. And then you need to have a good relationship. So a clients with kind of a shaky relationship, it's going to be difficult to implement value pricing, because you can get them, they could abuse, or they could see that as an opportunity to change consultants or accountants. Now, the engagement letter, in my opinion, is at the heart of the entire process. If you don't have a good engagement letter that clearly defines what you do, what you don't do, who does what, who's responsible for what at what times, that is going to be an issue. Now, this is going to be a tool to communicate with your clients. If there's a problem 2-3 months later and they say, hey, you told me this, you told me that, you go back to the original engagement letter, copy and paste it on the email and say, listen, these are the terms of our agreement. So it's important to sit down with your client, especially as you're getting this started, and talk about that. Now, the interesting thing about engagement letters, especially when you identify what you won't do, what you will not do, it entices clients to say, hey, why won't you do this? Or why won't you do that? Or how much more is it for you to get involved with my payroll? How much more is it for you to do my sales tax return? How much more is for you to monitor audit trail of deleted transactions? Or whatever is it that you're identifying as what you will not do, limitations of scope of work, are a great opening for a conversation about what else we can do for the client. Okay, you check with your insurance company has good engagement letters. If you look at specifically in the Pro Advisor toolbox, inside of the Pro Advisor toolbox, there's a sample engagement letter for QuickBooks work that is great. It's a great starting point for that. And details about payments, payment method, payment structure, it's by itself, I think, the most important piece, because hand in hand with value pricing goes paying on time, right? Because as an accountant, you have to assume that your client is good. You want to feel your client has a good relationship with you. So having automated payments in itself makes it great. And since your client is not expecting an invoice for hourly fees, they're just expecting that money being debited from their account or whatever. And you always have to have time to reevaluate, right? So engagement letters need to have a limitation per quarter, per year, because if a client is growing, right, and if a client is shrinking too, but if a client is growing, then you're going to get hit by getting paid a small fee for more services, more work you have to do. And if the client is shrinking, what tends to do, most clients don't actually call you and say, hey, I don't value you anymore. I want to start paying half the fee. A lot of times what they do is they say, look, I can't afford you anymore. And because they want to save face, they don't actually try to negotiate your fees down. So you also don't want to lose a client that's shrinking that you can still service. So that's an important point to kind of keep in track. Now, what I like about Intuit sample engagement letter is that it contains, in a very simple, easy to read, no legalese, what we will do, what we won't do, what we need you to do, when we will do it, how we will get paid, and then what is specifically said, what is specifically listed as something that's outside of the scope that will be billed separately. So I want to kind of show you what that letter looks like real quick. So I'm going to just switch here to my Word file here. There we go. Okay, so if you go to the Pro Advisor website, in the toolbox, you're going to see the Word document for this. So this engagement letter contains a quick introduction here about exactly what the letter is all about. And it's a letter more than just a contract, right? But I mean, it works as a contract, but it's a letter. And it says, look, this is what we're going to do. And it's all specified in here. And you obviously can modify this and add or remove items. And then things about what we won't do, right? A disclaimer about that this is not an audit, a disclaimer that this is, just consulting work, whatever it is. Whoops, that zoomed in too much. What we will need from you. So a lot of times, the issue with the clients are that we ask for information and we don't get it. We ask for check images and we don't get it. We ask for bank statement and we don't get it. Or they send you something, and in their head they're like, oh, I sent you everything, right? So that's the big issue. It's in an engagement letter, you can specify specifically what is it that you need, and you can even write down in this engagement letter, every month by X date, we're going to send you an email of all the missing items or all the questions. So when we will start the engagement, when will it end? Think about software and hardware warranties. Now, this is more important for when we're working on a client's computer, which completely goes away with QuickBooks Online. We don't have to worry about touching their computers, right? Because that's a problem. Some clients will get a virus a week later and say that you did it somehow. We specifically list, what is outside of the scope of work and what our hourly fees would be otherwise, and then just your standard signature and the date. So that's what I really like about this engagement letter. Is it's simple to read, simple to use. Now, I want to also share with you some of the packages that I've done in the past. So I would just give you this package here. So this is me personally. If you want to take a picture of this, you can do it. I won't share this. This is how my company invoices value pricing, but I'll give you just an idea here. Package 1, and I describe it. Perfect for startups, solopreneurs, these are entrepreneurs, sole proprietorship, home-based business. We have a fee range because, again, some clients will be busier than others, and fee range is better than fixed fee. And then we say, look, we include QuickBooks Online Essentials. We include one remote training session, basic remote training session with one of our seniors bookkeepers, not the CPA, one of our seniors bookkeepers. We include 1 month of bank reconciling, 1 month of credit card reconciling. We specifically say bank feeds need to be enabled, right? Because we all know how much faster it is to work with bank feeds. Presentation of financial reports via email, via Dropbox, whatever. And then we say discounted training consulting time. So we are not including any training with this or consulting, but we're giving them the added benefit that if they pay a fixed fee, then they can have additional services beyond that at a preferred rate. So this is kind of a combination between hourly fee and fixed rate, because obviously you always have to leave it open for hourly fees. Now, this is package number 2. This one contains 2 sessions of training already built in. It contains 1 to 2 accounts or 1 to 2 credit card accounts. And then here's package 3. Like, for example, package 3 comes with QuickBooks Online Plus, and it specifies usability, and it also has one 60-minute session with a senior bookkeeper, two 30-minute with a junior bookkeeper. So these are just different ideas. And then we have the premium package. This is the big one. This is for companies that want the accountant involvement on site. So we do everything above, plus we'll physically go there and have a meeting with you. We physically go there and present the financial reports. We physically go there and sit through a meeting and be part of the growth and strategy of the business. So these are just a couple of examples there. These are personal from my company, right? So they're not going to be on the PowerPoint slide. Okay, and the important thing I wanted to bring out about that is that the core service will have a fixed price, but sometimes things beyond the scope of work, you want to welcome them. You don't want to completely, not do them. You don't want to completely ignore the client. You want to have additional services available. All right, we need to jump in and do our CPE question because we're about to get finished. So I'm going to pull in our poll question. There it is. You must answer correctly in order for us to have in our logs our CPE. So just choose the correct answer. Okay, we have about 85% of the votes in. I'm going to wait a little bit more. I'm going to give it about 30 seconds to get most of the votes in. And then while all the votes are coming in, I'm going to check through the questions to see if anybody had any questions or any concerns or any tips they wanted to share. If anybody wants to share, just kind of raise your hand in there. All right, let me see. One person, attendee. Okay, I'm going to unmute Elrica. Elrica Richards, you're unmuted. Do you want to ask a question? Elrica, can you hear us? Okay, I couldn't get, let me just mute her back. Let me try Susan. Susan had a question. Susan, can you hear us? Can you talk to us?
Yeah, can you hear me okay?
Yeah, no problem, Susan. How are you?
I'm good, thanks. How are you?
Excellent.
Do you mind emailing out a copy of your packages that you had?
Okay, we don't include them on
Your
the.
personal packages?
Yeah, I don't mind emailing them just to the attendees. What we, these packages are particular to my firm, how we work, how our clients work in Miami with the mixture of employees that we have. That's why we didn't want to make it public to have that to be concrete out there, because we're not supposed to uh, uh, change the market. So I can't make public a sample pricing, because everybody will be working off the same pricing, and that could be negative towards us. This pricing needs to be very personal. So I don't mind if any of you actually want it. What I'm going to do is I'm going to put my email up in the screen or in the chat, and you email me and I'll send it to you personally, no problem. Does that work?
That works perfect. Thank you, Hector.
Okay, I'm going to put my email up in the chat. So if you want to ask for it, I'll send it to you, no problem. I just can't make it public because it's being recorded. And any more questions, Susan? Should I unmute you?
You can unmute me. Thank you, Hector.
Okay, thank you. Nice to meet you. I'm going to try Elrica Richards again. I think you had a question or comment. For some reason, we can't hear you. You're unmuted. Anybody else has a question or comment, want to share something with the group? Anybody with a positive experience on value pricing or a negative experience with value pricing that thinks will be some sort of value to discuss in the webinar? Anybody else? Okay, there we go. There's Susana. So I'm going to unmute Susana. You're unmuted. You want to share something with us? Ask a question?
Hi, Hector. Thanks for the opportunity. I actually work with most of my clients on a value pricing structure, and I really like that for so many reasons that you detailed today. So none of that part was surprising. But one of the things that I struggle with is once I have them in the value pricing model, I am sort of stuck at how to ever go up in that. So I've been stuck with a few of my clients for 3-4 years at the same rate, and I just struggle with how to maybe approach it when really my services haven't changed. It's more a matter of the value of the dollar has changed.
Of course, absolutely. So first of all, we got inflation we got to deal with. That's one. Two, if you're on this webinar, I can assume that you're also in other webinars, and I also can assume that you spend time training yourself and improving yourself as a consultant. So you want to get compensated for that. I assume that's the reason why you want to increase your prices, correct?
Correct.
So that being said, first thing I would do is create a new. First of all, I would make it public to all your clients that your hourly fees are going up. That's another slide I said. My hourly fees are going up. That should be across the board something that you have to put together. And then parallel to that, our fixed rate pricing will also be adjusted. Make sure you have new letters drafted. I would venture to just write those clients that you want to change, just write the engagement letter. Take the Pro Advisor, a sample that's there, write the engagement letter, and put a clause there that for the month of July, let's say, for example, for the month of July, you will be meeting with every single one of the clients to reevaluate the scope of work, reevaluate the monthly fee, and just tell them that it's always subject to change at least once a year. So I would say that would be my first initial approach.
Thank you. I do appreciate that. I feel a little bit more confident after today's seminar. I just think it's a hard subject to sort of approach when I didn't put that in place to begin with. And I've just been feeling a lot of guilt about doing it, but I know that it's time.
Yeah, and Susana and everybody else, there is a speaker out there, an author. His name is Ron Baker from the VeraSage Institute, and he wrote a book. I think it was published maybe 3 or 4 years ago, called Implementing Value Pricing, and the book is very detailed about economy and how economy works and the internal economics of a firm and how all that stuff works. I strongly recommend you look into that book. It's called Implementing Value Pricing by Ron Baker. Also, another author, her name is Eddie Osborne, and the name of her book is Firm Forward, and she also talks about transforming the firm into a service-driven firm more than an hourly input level firm. So those two books are really interesting to kind of get some perspective about value pricing. And every company, every firm will implement value pricing differently. You can't grab some one person strategy and add it to your firm, because you have different employees, different staff members, different demographic, different customers, different needs. So it's very challenging to grab somebody's pricing model and implement it with yours. So I would say be careful about doing that. That's why I'll email you my pricing model, but you have to adapt it to your customers.
Thank you.
Thank you, Sana. Anybody else? All right. If we don't have any more hands raised, any more questions to the chat, go ahead. Feel free to send me an email if you have any questions. Whoop, somebody else raised your hand. Is it? No, nobody else raised your hand, I think. All right. So I'll be ending this webinar. And I hope to see you on the next one. Thank you very much.
Thank you.
Goodbye.